so essentially throughout the life cycle of the project. The third point is energy information, and that is essentially the focus of my remarks here with you this morning. As part of energy information, the overarching goal here is to provide energy information to Canadians to enable analysis, decision-making, and an informed discussion as Canada goes through the energy transition it currently goes under. We also strive to build partnerships. As recently as this week, we have published a report regarding heating and cooling strategies in the energy transition in collaboration with the International Energy Agency. We have also partnered with our federal partners such as NRCan, Natural Resources Canada, Statistics Canada, and also Environment and Climate Change Canada to improve the availability of energy data for Canadians. So this continues to be a somewhat long-term endeavor, and our first step is to put in place a one-stop shop or a one window on StatsCan website where Canadians can have access to energy data in an easy format. So the topic of the session today, as explained by Peter, is energy infrastructure. So it's important to understand the different market dynamics at play affecting different commodities. So the first that I will tackle is oil. I don't think there's any more contentious topic in Canada right now, so let me just start with this one. What you see on the screen is essentially the manner in which pipeline capacity and oil available for export has evolved through time. And I will draw your attention to the far right end of the graph, where you see the shaded area representing pipeline capacity and the black line showing the oil available for export. So what you see is essentially oil available for export outpacing available pipeline capacity. So what this means is that it has created an oversupply of oil in Alberta, which has depressed local prices. So Western Canadian Select, WCS, is the manner in which oil prices are quoted in Alberta. And this is always in reference to WTI, the trading point at Cushing in Oklahoma in the United States, which is a reference point for the US. So Canadian oil is typically always traded at a discount at about $15 on average. But what we've seen in the fall of 2018 is that discount to go all the way to $50 at the worst, on the worst days, which has essentially created a crisis situation for oil producers in Alberta. And when the situation reaches such a point, basically because there was insufficient pipeline capacity, is that policymakers take action. So what did governments do? Well, in the first place, the Minister of Natural Resources in Canada, Mr. Sohi, asked the NEB to conduct a research to determine how pipeline capacity can be further optimized, and the NEB looked at that question. More fundamentally, though, the province of Alberta has curtailed oil production in order to support prices. The initial curtailment was 325,000 barrels per day, and that has been reduced somehow over the previous months, but when it was instituted in January 2018, it started at that level. So the market reacted in a way that supported the prices in Alberta and the WCS price, which brought differentials to more of a normal level. What's interesting to see is that because oil pipeline capacity have not kept pace with production, the market has found an alternative to take oil to market, and that is crude by rail. Crude by rail has always been somewhat of a relief valve for the energy system, and what we've seen is that through 2018, exports by rail have actually reached record levels, 9 consecutive months, reaching 353,000 barrels per day or thereabouts at the end of December. So obviously when you have lower production, then the relief valve is not as necessary as before. So the level of crude by rail has reduced somewhat, notably basically by about 50% in the subsequent months in 2018. So now moving to natural gas. Natural gas is an interesting story as well because technology has allowed the development of new supply basins in Western Canada. not so long ago, you could see vertical wells being used to produce gas all over Alberta, but with improved technology, horizontal drilling is now used in a more localized section of the country in northwest Alberta and northeast British Columbia, which actually forces the NOVA gas transmission system, so the NGTL system, this pipeline system gathering natural gas from those production wells to reach into those new supply basins that are actually liquids rich, and this is why NGLs have been quite attractive for natural gas producers as well. So what you see on the graph is, the graph below is the black line that is a bit of a step function, is the capacity of the NGTL system that has been increasing through time. But as you see, the production, the shaded area, has been catching up with available capacity. And when you look at about 2015, 2016, when the shaded area reaches the capacity, you look at the graph above, the pricing situation between Alberta, the Alberta Trading Hub, and Henry Hub, the natural gas trading reference point of the US, is that while prices have been tracking one another through time, you start to see a divergence in prices, having Alberta reference prices becoming notably lower than what you typically see at Henry Hub. So pipeline companies in those situations, what we see is that NGTL is trying to develop gas pipeline in order to meet the demand of shippers, and the time it takes to develop a pipeline extension into new supply basin between the filing of an application all the way to the capacity coming into service is about 4 years. So that has been a bit of a lag in the ability of the pipeline system to meet natural gas producers' demand. Now moving quickly to electricity. What's important to, and I'm mindful of time here, Peter, I just want 2 more slides to go. About electricity, Canada has a fairly diverse mix of electricity generation across provinces. Some will rely quite heavily on fossil fuels, while others, like British Columbia, Quebec, Manitoba, and Newfoundland, will use hydroelectricity. So in the context where the globe and North America is trying to reduce its GHG emissions, then it makes sense to use hydroelectricity to trade hydroelectricity to reduce greenhouse gases across the continent. And we see that trading occurring to a large extent north-south between Canada and the United States, and that is illustrated by the blue bars on the right. What we have seen is Manitoba Hydro basically trying to get approval to build international power line to Minnesota, and we also see Hydro-Quebec seeking to increase its export capacity. And in both cases, while having incremental transmission capacity for hydroelectricity seems to be aligned with the policy goal of reducing GHG emissions, it remains challenging to get those international power lines in place, both from an Indigenous concern perspective as it relates to Manitoba Hydro, and in the case of Hydro-Quebec, the opposition is mostly south of the border. So in terms of trade between provinces, I think it's important to understand that the cost associated with such infrastructure, as well as the relative attractiveness of markets, are important factors to consider. And in a context where Canada has a pan-Canadian framework to put a price on carbon, maybe there will be at least directionally incentives to make such projects more attractive. In closing, the NIMBY is also looking at how Canada moves through the energy transition, and we have put that transition into a historical perspective in our most recent publication called Canada's Energy Transition, a historical and future changes to the energy system. I will draw your attention to the graph on the right, and where we see the share of total primary energy consumed globally. And what's quite interesting is to see how the dotted line, which reflects the share of natural gas, has been steadily increasing to mostly offset the use of coal that is apart from the wood line, the dark gray one, the use of coal that has been decreasing, but nonetheless seem to have plateaued over the last couple of decades. I will also draw your attention to the yellow line at the bottom, which is the non-hydro renewables, where it has a bit of a hockey stick shape, which I think looking ahead with the anticipated increased generation capacity from those from wind and solar can require additional infrastructure investments. So all in all, what we've seen is that when infrastructure does not keep pace with the supply and demand dynamics, we see a notable impact on prices, as well as an ability to markets to be efficiently served. And when we look at the current energy transition, then it will be important to think about the manner in which infrastructure can keep pace with the evolving need of the markets. Thank you.
Thank you very much. I think we're going to hear from Jean Côté, Suncor.
This will be my French introduction. So, to put our topic of discussion in perspective, I thought that I would address it this morning through the lens of a major oil company, Suncor. I've been working for that company for 33 years, and I hope that talking about what's happening in Canada will address our topic, which is local energy and global market. So I'll begin by a short description of Suncor, and our company is represented on that document, that slide that you see. So Canada is a big country. In Alberta, we have what we call the oil sand production, and this is extracted by two ways. The bitumen is recovered by mining, when it's in the surface, or by what we call in situ, when the resource is deeper in the ground. And we also have a plant there which is used to increase the value, greater value of that crude on place. At the other end of the country, we have also some platforms closer to Newfoundland, also in Europe. So these are the two ways that we extract the resources. And the total capacity that we have is 940,000 barrels per day. That's the capacity production of Suncor. So we are no close to the majors like the Shell or the Exxon, but still a fair size for a Canadian company. In the chain, we have 4 refineries. One of them is located here in Montreal, and these refineries, as you know, produce the oil, the gas, but also materials to make the plastics and a lot of the goods that we use every day in our life. And our total capacity is 460,000 barrels per day. And down the chain, we have an extensive distribution network, a retail and wholesale, and with 1,750 gas stations in Canada. You might have seen some of them. They operate under the banners of Petro-Canada. So Petro-Canada and Suncor, that's the same thing. And we are in renewable. We have 4 wind power facilities in Canada. We are also in cogen, and we have the largest ethanol plant in Canada, which is in Ontario. So that model that we have, which we call an integrated model, if you prefer a ground-to-gas station model, is quite resilient. It has been good for a company. There is many sources of profit that we can capture along the value chain, and this helps our company generate good cash flow independently of how the market is. So if the crude is high, if the crude is low, we can always usually are able to get some value for the company. The market value of the company is about 70 billion. We have 13,000 employees, and about 600 of them are here in Quebec. So a few facts now on reliability, because this is important, more and more important for all energy company, and certainly for the gas industry. As you know, there is a direct correlation between the quality of life, life expectation, and sufficient, affordable, and reliable energy. And emerging economies like China and India are also seeking for a better life, and that's totally fine. I mean, who can be against that? Huh? The population also is growing. I think we are at 7.5 billion people right now, moving towards likely 10 billion people by 2050. So the energy demand will expand, is expected to expand just because there will be more people on the planet. And what we know is that the oil will still be part of that energy mix in the foreseeable future. But that doesn't mean that it's business as usual for sure. And the next thing I'd like to say a few words on is climate change. So climate change is real. That's a change that is one of the most pressing challenges, if I may say, that we have to face with. It's a shared responsibilities, and companies like mine definitively have a work to play in that field. So there is many ways to address climate change, but there is no silver bullets. And that list that you see behind me, you can have put it yourself. Huh? There is classic things like renewable energy, carbon capture, better public transportation, the way that the city will be developed, recycling, doing that more effectively, and you can see the rest of the list. But one point I would like to mention is technical innovation, which you see there. That's very key. That's a big lever for us. And it's not only applicable to renewable energy. Sometimes we make an equation, technology equals renewable. Yes, it does. But also companies like the oil and gas are quite involved into technology. And I will say a few words in a few minutes. So all of these must come into play. And as an umbrella to all this, there is that the way that us are using that energy. Because I would say that consumption is probably the biggest thing. Production will follow the consumption. The way that we will consume will define the energy that we will need. So a few words on energy. So we know that the world must transit to a low carbon energy. As I said, oil and gas is behind that. We are trying to decrease our footprint, and I will just give you a few examples here because there is many. In Alberta, I'm not sure if you knew this, but you often hear about the oil sand, and the Alberta government has decided to cap the emissions of that industry, and that cap is 100 megaton max of CO2 per year. So we are below that now, but our company supports that kind of limit because it will force, we believe, the industry to be better at controlling innovation and to invest more in that field. And on investment towards environmental causes, there is something that exists that has been created like 7 years ago. It's called COSIA. COSIA stands for Canadians Oil Sand Innovation Alliance. And what is COSIA? That's an association of 10 oil sand companies that have decided, even if they are competitors, to share the technology among themselves to improve environment. And so far, there has been more than 1,000 technologies that have been shared, and the value associated to that is more than $1.5 billion. So these are examples. I can also mention that we just started a new mine in Alberta last year, which we call Fort Hills. It was a $17 billion project. And that mine, the barrels that are coming out are equivalent in carbon content as anything else that is produced in the US. So big step change. And there is more in the future. The in-situ extraction method that we are looking at now, we are thinking at a reduction that can be up to 70% as far as emissions versus what we do today. So all steps in the right direction, just to let you know that the oil and gas is not closing their eyes on the progress. We also support, as a company, the carbon tax or the carbon market. We would like it to be as global as possible, and we are behind the Paris Agreement. Another aspect of sustainability, and certainly it's the case in Canada, it's the fact that we are working through many partnerships with the First Nations, the Indigenous people. And we've been doing that for years, but there is a couple of big ones that have been done. The last one was last year. It's a $500 million partnership with the First Nations in Alberta in a terminal that we have put on place. 30 of our gas station I was mentioning earlier are now operated by the First Nations. Same thing, they are partners with us on wind farms and other terminals. So that's another way of being sustainable, and we are certainly engaged with these communities throughout Canada. Now, what is the outcome of the Canadian oil production in the decades to come? Well, we know that if investment would stop today, we'll be unable to meet the demand in the future. And we know that Canada has the energy that the world needs. And on that graph behind me, what you see is in light blue is the resource on that pie chart that Canada has. So it's a fair share of the world of the world resources. And if Canada does not supply that resource, well, other countries will, like Venezuela, Saudi Arabia, Russia, Iraq, Iran, and so forth. And they will be more than welcome to do that on our behalf, for sure, because I guess it's a question of demand. And sometimes the Canadians who oppose the development of our resources don't put that into perspective, that if it's not us, it will come from somebody else. But in order for the industry to invest, it needs some degree of confidence, some clarity about the future, and this is not the case in Canada. We need in Canada some good regulations. We need clear public policies, and this is not what we see these days in Canada. Regulatory certainty is critical, and what I can see, simply put, if I want to summarize that, is there is kind of an off-Canada signal right now, an off-Canada signal. You see the investments people are shy to invest in the country. So that signal is make it more and more difficult, not just for industry, but also the wind farm projects. You would think that renewable energy would be easier, not necessarily. We have a few projects, and it's been as difficult sometimes to push these projects forwards as it is for the oil and gas, the pure oil and gas project. So we are already having in Canada many regulations to comply to. There is hundreds of them. Just the refinery of Montreal that I used to be in charge of, they have more than 400. And we meet them every day in, day out. But there is more to come, and there is what we can call regulatory inflation. And that graph, I understand it's packed, but what I wanted to show on that graph is really the cluster that you see to your right. Each of the dots is a new regulation. There is a big list. And as you can see, the last few years, we've seen an explosion and inflation of the number of these regulations. And one of these dots is called Bill 69. Bill 69 is a new piece of federal regulation. And the objective is quite good. The government of Canada wants to strike a balance between enabling sustainable development on one side, and on the other side, they want to restore public and investment trust in this institution that govern their government. So the idea is good, but if the bill was accepted as is, it will be a big issue, because what this has as an impact is it delays the approval. You were talking about 3-4 years, maybe before. Now I think we have looked at this rapidly. It would go from 3-4 years probably to 10 years, day in, day out for any projects. So imagine you want to invest something, and you will be in the paperwork for 10 years. So that's kind of where we are going. So we support the concept, but what we believe is for that bill to be good, it needs 3 things. The first is to provide efficiency, predictability, and stability. It should be harmonized as well across the jurisdiction, because in Canada we have jurisdiction in each province, plus the federal on top of it. The second point is that it should provide a voice to the affected people. It should be fair, and it should equilibrate the process. People should be able to, the stakeholders should be able to comment in an effective manner. And the third point will be that it should be administered by a competent regulator that is accountable for the outcome. So right now, that bill is with the Senate. They have proposed a 187 amendment to it. So the Senate was not in agreement with the Chamber, not yet. So we are encouraged by the Senate commitment to achieve a bill which is workable, and this will be to follow in the next few weeks. So in that context, let's talk a bit about the market access per se. Market access for Canada is in the national interest. That's something also that is not communicated enough. It's not just for the oil and gas company, but it's about all Canadians, because all of that money, as you know, generates further investment. So therefore, there is more jobs. It's good for the education system, for healthcare. The taxes and the royalty that we pay are used for nurses, doctors, and teachers. So we naturally, as a Suncor, support the development of pipeline infrastructure, because we want 2 things. We want to expand the connectivity to the US. And right now, we have one customer, which is the US. That's the only place we can go, basically, with the crude, the Western crude, the only place. So we would like also to see these pipelines give us access to other customers, other markets. We support also pipelines that are safe and environmentally sound, and we've done that. We've been like this for decades. So that's something that we support. So the big one are Trans Mountain Expansion, the Line 3 from Enbridge and Keystone XL. All of them we support. One word on curtailment that was mentioned a bit earlier. So that the government of Alberta, looking that it was hard to get a fair price for the crude of Alberta, decided last year to instate curtailment, which is still enforced. And well, it had mitigated results, if I may say. Yes, the price of crude went up a bit, which is good, but then the economics to move that crude out of rail was not good enough. So as you can see, there is always a cost to effect. So you can get more from your crude, but then it didn't do much as far as removing or reducing the inventory in Alberta, because crude by rail become uneconomic out of a sudden. So what we suggest, what we propose is to leave the market and do it by itself, leave the offer and demand be in balance. We don't really support that kind of intervention by the government. So, yeah. In conclusion, then, Suncor is we are through to our business strategy, which is to be an integrated oil company, as I said, present throughout the chain. We are a leader in sustainability, and we have a long-term view. Our resources, we have enough for the next 50 years. But we understand that economic, environment, and social dimensions are deeply integrated, and we need to have success in all if you want to be a good company. And this is what our employees demand as well. So going forward, we'll continue to manage costs and manage the business, but also we'll be working and continue to work on reducing carbon. Because the benefits, as I said, should be shared more fairly, not just for corporate profit, but for every Canadian. And my conclusion would be that the world needs more Canadian oil. Thank you.
Thank you very much. And our final speaker is Jürgen Weiss from the Brattle Group.
So that's also where I'm going to stop my French introduction, although I could continue actually. But so I'm going to have only 3 slides, and no slides about Brattle. Brattle is an economic consulting firm. We're mostly a bunch of PhD economists working on all sorts of energy issues. So we do a lot of work on gas pipelines, oil pipelines. We do a lot of electricity market design work. I work primarily on deep decarbonization issues and electrification. So we span a whole spectrum. I will try to set this up for what I hope to be a very interesting discussion. And in doing so, I'm going to sort of present a somewhat different perspective. So this is about infrastructure. This first slide just makes the point for the sector I work most in, which is the electricity space. So we recently did a study for the US for a trade organization that represents transmission owners. And we try to figure out what role electric transmission might play in the United States by 2030 and by 2050, thinking about 2 trends that go on simultaneously. One is a trend towards more variable renewable energy generation overall. And the second one is to meet deep decarbonization goals that exist, a shift from direct use of certain fossil fuels, natural gas for heating primarily, and oil for transportation primarily, towards electricity. And that study, which you can download from our website, in the end, it concludes that to meet the demands of an electricity system by 2050 probably requires doubling the annual investments in transmission infrastructure relative to the recent past. So a significant need for additional electric infrastructure. So that's electric. Second slide, so I really liked Mark's presentation this morning about, so I think about this in the context of deep decarbonization. A lot of places around the world have signed on to the Paris Agreement, whether they're individual countries or states to some extent committing to meeting the Paris goals, even if the countries haven't. This is Massachusetts. This is just sort of supposed to be an example. So this is the Massachusetts energy system in 2016, and then in 2050. And you see the dark blue stuff is primarily oil. and that's transportation. Then the red area and the light blue area is the basically building sector. And that's primarily natural gas and a little bit of oil. And then you have the gray area that is electric generation. That's currently in Massachusetts, roughly 50% gas. And then the rest, a good share of nuclear. Actually, that share of nuclear is coming down today. I think the Pilgrim nuclear plant is shutting down today. And then increasingly renewables. And then there are a bunch of other things, industrial emissions and non-energy emissions from agriculture, land use change, and things like that. So Massachusetts, as I said, like many other states, has a 2050 actually mandate in Massachusetts by law to reduce emissions at least by 80% by 2050. And so here we just sort of set an example of how you might get there. So you have to reduce emissions in the transportation sector from 32 million tons to 7. You have to pretty much eliminate the emissions in the building sector, and you have to completely clean up the transportation sector, i.e. no more emissions in the transportation sector. There will be sectors of the economy that are really hard to decarbonize. Certain industrial emissions are really hard to decarbonize. Emissions related to land use change are hard to decarbonize. So the basic story from this picture is a realistic view of what decarbonizing a state like Massachusetts to meet mandates by 2050 means is completely decarbonizing the 3 big sectors: electricity, transportation, and buildings. And so in the context of talking about infrastructure, I think that raises very interesting questions about the future role of various types of energy infrastructure, which I have here sort of come up with 5 different types. The first one already I haven't talked about is the electric distribution grid. So obviously a lot of our homes and structures are connected with wires to supply electricity. There are some who suggest that we don't need those in the future, where it's a vision of a very decentralized electricity system where every structure generates enough energy in the form of electricity to power itself. I find that extremely unlikely to be the outcome. I'm not saying that there won't be pockets where people can go off the grid for all sorts of reasons, whether that's personal preferences or in some cases even economics. I'm thinking about that farm out in Saskatchewan somewhere, or that has like a really long thin wire going out there. But I would suggest that the electric distribution system may well be the backbone of the future energy system. Because to the extent, and maybe we'll get into that a little bit, maybe the wrong panel, to the extent, for example, we shift towards electric vehicles and electric vehicles continue to be at least somewhat personally owned, then refueling those vehicles will take place at home to a significant degree, and we need the distribution infrastructure to make that possible. Similarly, to the extent we shift to some extent from using gas furnaces for heating, for example, to using heat pumps for heating, same story. You need to have the electricity right at the building level. So I would suggest that among all the different energy infrastructures, the electric distribution system is probably the one that has the brightest future and the most important role to play. Second, I already mentioned the electric transmission system. We argue in that paper that in spite of the increasing sort of performance and cost advantage, if you want, or the cost declines of more distributed energy sources, electricity sources, it is quite likely that there are large parts of the world where making all the electricity you need locally is going to be quite challenging, just because the density of energy use is already high today, and if we electrify more stuff, then that challenge will increase. Just think about supplying the electricity to Hong Kong or to New York City from rooftop solar. It's going to be pretty hard to do that. So that's one, just the feasibility. And then second, just because of sort of underlying engineering economics, if you want, and the availability of resources, the cost of renewables that are provided from bigger wind farms or solar farms, or are where those farms are, or these resources are built in places where the sun shines a lot of the sort of blows a lot. Those will remain sort of at least relevant factors in deciding whether you want to stick a solar rooftop on your roof or sort of buy that, the energy from, in the US it would be from Arizona, from some place where it's really, really sunny. And then the third reason why I think the electric transmission system still has an important role to play is diversity and insurance. And I'll talk about that a little bit more. So one of the key challenges that will emerge as we move to higher and higher sort of shares of renewables in our energy system is that the production becomes more dependent on weather, basically, right? Weather and silly things like the sun goes down at night, those kinds of things. But I think in particularly weather patterns, and not just diurnal weather patterns, but longer term weather patterns where the sun doesn't shine for basically 2 weeks in a row. And so if you rely only on solar energy, locally, you're going to be in trouble. If you have a transmission wire that connects you to Arizona, the probability that the sun doesn't shine in Boston, where I live, and it also doesn't shine in Arizona is pretty low. So you get big benefits of diversifying if you want your portfolio of resources that allows you to sort of manage sort of longer term mismatches between supply and demand much better than if you rely only on local resources. So that's one reason why I think the electric transmission system will likely also play a critical role in this future energy system. Now it gets harder. So now we're talking about the three other ones that I can think about is the natural gas distribution system, the natural gas sort of interstate pipeline system, and then the oil pipeline system. And as you can already see from the graph, and I'm sure you're reading ahead, I find it increasingly more challenging among those three to sort of claim with confidence that these types of infrastructure will play a very meaningful role in 2050. So as my previous slide shows, right, so you have to basically get rid of the fossil natural gas and the fossil oil in the energy system by 2050 to make the targets by 2050. So that, at least as a first approximation, raises some serious questions about the role of those pipelines. Now, to sort of channel back Mark from this morning, I think there is an interesting question that anybody could say, well, these are, to the extent that private investment goes into building infrastructure, if somebody wants to bet that that infrastructure is profitable, that the NPV from building an infrastructure is positive, then let them at it. That's fine. I think, and I hope maybe we'll get into that, the reality is, of course, that it's a combination of private investment and public support where in some cases the public support is financial, where they're literally, right, so for example, transmission and natural gas distribution and to some extent transmission systems are regulated, and the rates are regulated, and the investors recover their investment through regulated rates. So there is actually a public support system in place that makes the investment possible in the first place. In other cases, that's less the case, right? There are certainly there are merchant transmission projects in the electricity side, and then there are pipelines per se are not supported by regulated rates of the flow over them necessarily. So there are instances where it's not a financial support, but it is still there's a lot of public impact, sort of public role in making that infrastructure possible. Even though this is a very dangerous subject to start here, but Jean-Denis started it. So I was one of the expert witnesses on the Northern Pass project, working for the Attorney General in New Hampshire, and so so that is a situation where the public involvement was very critical, and in some sense, perhaps may have doomed this project in the end. Again, channeling Mark from this morning, the question is, assuming for a second that we just look at the colors here, that there isn't really a role for oil pipelines to transport a resource we can no longer use in 2050, then is it completely legitimate to then have the public, the policy process, the political process make those types of projects impossible? I think that's, so in other words, rather than saying, oh my God, we need to sort of enable this infrastructure because I've calculated that the benefit cost ratio of having more oil infrastructure is positive, is it not legitimate to say, well, the political realm here also plays a role, and in effect makes that kind of infrastructure more expensive to build, and maybe then makes alternatives to it more attractive. Whether those alternatives are, for a while, transporting oil by rail, I don't know, or whether it's sort of shifting energy sources, period, is another opportunity. I want to sort of spend a couple minutes to talk about the way the color scheme implies no role for this, natural gas pipeline, perhaps distribution and oil pipeline infrastructure. I am not 100% sure, and this is where this gets interesting, right? So when I think about deeply decarbonizing energy systems, these days I think about two mechanisms for doing that. One I call direct electrification, and the other I call indirect electrification. The direct electrification is what everybody talks about, where we just all have battery electric vehicles, and that's the transportation side. And then we have heat pumps to heat our homes in the places in the world where we need to heat homes. So they can be air source heat pumps or ground source heat pumps, and they are pretty efficient on average. It turns out that those solutions are good in some areas, in some situations, and they're much less obviously good, or in particular not obviously easy to implement in other areas. So for example, it may be very, very difficult to replace all the heating systems in the 300-odd million residential structures, 200-odd million residential structures that exist in the United States over the next 30 years, which is what we'd have to do if we wanted to directly electrify space heating. So in other words, from a pure practical perspective, it may be much easier to decarbonize the fuel itself than it is to decarbonize, in some sense, the technology at the end-use point that converts electricity to heat. This has been sort of maybe esoteric, but the term I'm getting to is something called P2X. So where P stands for power and 2X stands for anything. So versions of that are something called power to gas or power to liquids. The power to gas thing is the vision is you use renewable electricity, you use an electrolyzer, and you split water into hydrogen and oxygen. So then you have hydrogen. And all of us have heard about the hydrogen economy. So one solution is directly use that hydrogen, which, by the way, you could stick into a pipeline, to my point, and transport it someplace. And then at the end point, you convert it back into, for example, electricity or heat or electricity plus heat with a fuel cell or something like that. Or you do power to gas, right? So that's one step further. So you have electricity, water gives you hydrogen. Then I'm finding some kind of CO2 stream or carbon stream. I add carbon to the mix. So hydrogen plus carbon, stir it all together, and I have methane. Or by more complicated processes, I put in more carbon molecules, I stir a little harder, and I have liquids that look like carbon neutral jet fuel. And so those things are either gases or liquids. So, if I stop at CH4, I have methane. I could stick that methane into a normal gas pipeline system, and I can then stick it through the gas distribution system, and I could heat people's homes with that methane where nothing changed except I have taken out the fossil content of the fuel, of the gaseous fuel. And so what I find interesting is that so there were periods in time where the hydrogen story was much more sort of prominent than it is today. And a lot of the oil companies, and maybe we'll get into that, the oil companies see the sort of the renewable fuels future that includes the sort of electric fuel pathway as a realistic alternative. I am not sure whether it is, but I do know that when I model a highly decarbonized or fully decarbonized electricity system, I find it very difficult to come up with good solutions to sort of meet the challenges of long-term sort of swings of supply versus demand. So this is a winter that was 20% colder than your typical winter. This is a summer that was particularly hot. Or this was a spring where the sun didn't shine very much. Those situations are really, really hard to deal with our traditional technologies, and they include basically wind, solar, and then battery storage. So those pathways are feasible solutions for that. And to the extent they meet that challenge on the electricity side, okay. So that may merit some residual infrastructure. The question is how deep, how much of that do we need, right? So if we need only a little bit on the electric sector to manage the seasonal swings, it's okay. But the big question is whether in the long run, we're going to convert most of transportation into battery electric vehicles, or maybe we're going to stop halfway, and the other half, medium duty vehicles, freight, rail, ships, air travel, will continue to rely on something other than batteries. And for that, we need a fuel. And if the quantity of that fuel is large enough, then the challenge is to decarbonize the fuel, and we may still use the existing infrastructure. So that's why at the bottom here I have sort of two questions that are central to me, and whether or not the gas infrastructure, both at the distribution level and the interstate pipelines, and the oil pipelines have some sort of future role to play. Clearly, if everything goes directly electric, then there's a high chance that oil pipelines will get stranded. So a question for somebody who develops oil pipelines is if the business case still makes sense, if the oil pipeline is sort of amortized over 10 years as opposed to being amortized over 30 or 40 or 50 years. So in general, from the society's perspective, I think there's this question of whether we engage in infrastructure investments that result in a significant stranded cost risk. We build infrastructure that we know we were not going to use in 20 years' time when the infrastructure can last 50 or 100 years. The flip side of the sort of stranded cost issue, which says maybe we shouldn't build some of this stuff anymore, we shouldn't support getting it built anymore, is that infrastructure also has insurance qualities. So in other words, if my vision is that I am going to directly electrify everything by replacing all the gas furnaces in every home in the world with a heat pump by 2050, and for some reason I'm not making it, then what's my alternative? If I have basically not maintained or built additional pipeline type infrastructure to deliver a decarbonized fuel, then I will not meet my greenhouse gas emissions reductions. And so having built it, even if I don't use it, I have the option to then use it with a decarbonized fuel. And I think, so thinking hard about the risk of creating stranded costs on the one hand, and having insurance against what you think is going to happen not working out is an important question to ask. And the final question I ask here, and I asked it often these days, is are the risks, are the costs are the stranded cost risk and the insurance benefit, are they symmetric? In other words, if I spend another $50 billion on pipelines and they turn out to be stranded, maybe I have stranded $30 billion. The most I will have stranded is the investment I made. That's one. Now, I'm not going to build the infrastructure, and as a result of that, I find it impossible to meet my greenhouse gas emissions reductions targets. Then what is the damage that's caused by that? Can I calculate that? I would argue it's really hard to calculate. It's a good exercise to think about it, but in at least for some infrastructure investments, I would argue that the unknown and potentially very large downside risk of not being able to meet your greenhouse gas reduction targets may well merit making some of these investments as insurance investments, even though my consultant's prediction of how the world will evolve suggests that maybe we won't need that infrastructure in 2050. And that's the end of my presentation. Thanks.
So I think that's set up for us a number of issues. One I think is we often think of opposition to pipelines and transmission lines and these kinds of things as NIMBYism. People just don't want this infrastructure in their backyard. It seems to me that's rather different to the kind of questions that Jürgen's raising, which is this long-run issue. And I think some of the opposition now is more in the nature of people thinking about the long-run transition questions that you've raised, rather than NIMBYism. I guess first question I'd ask you all is, what do you think about this? Has the nature of the opposition to infrastructure changed recently or not, do you think?
I can start. What we've seen, obviously, is some degree of opposition from local landowners, local municipalities and communities who are concerned about the potential impact in case there is an incident on hydrocarbon pipelines. That's one thing. Probably more fundamental and about what's occurring right now in Canada is the constitutional rights of Indigenous people and how the country is trying to determine what does it mean to meaningfully consult with Indigenous people as required by the Canadian Constitution. And as we've seen with the Trans Mountain Pipeline, this is a fairly evolving concept. The courts have been providing some guidance along the way, one being that the NEB process, for example, can actually be used by the Crown to fulfill the duty to consult. And at the same time, if you are trying to fulfill that duty, whether you are the Government of Canada or the NEB or the CR, if the C69, if Bill C69 moves ahead, is that there is this need to meaningfully consult and grapple with issues. So what that means is often industry will say, oh, I've met with landowners and indigenous groups so many times and I talk to them and it's all good. But in reality, what the Federal Court of Appeal decision is indicating is that, yes, you need to consult, you need to inform stakeholders, but you also need to take into account what you hear when you design your project. And if you don't do that, then what the court have said is that you do not fulfill the duty to consult, and then Indigenous people have an ability to raise those concerns to the courts, and the courts say, no, the project cannot move ahead. So it's in that, at least from our perspective, this is what we've experienced over the last couple of years.
Mm-hmm. Is it possible to use these kind of offsets I spoke about in dealing with the native peoples? Some of these provide something else for them in return for approvals?
That's one approach that industry can use. At the same time, in the case of linear infrastructure, when you have potentially hundreds of First Nation on a 1,000-kilometer pipeline, then again, I come back to the constitutional right. It is possible for an Indigenous group that is not interested in basically negotiating with a company to reach a deal, so to speak, and show to the court that they have not been meaningfully consulted to have the court rule in their favor.
Maybe my original question. Maybe.
Yeah, no, that's, I agree with what you just said. It's, to your first point, yes, I would say yes, it's much more difficult now to build an infrastructure that it used to be. And that's probably normal. There is more awareness. And what we are looking at, what everybody should be looking at is that win-win situation. I mean, we need that energy at the end of the day, as I mentioned earlier. Everybody does need it, regardless if they know it or not. But then we have to do it while respecting the people who are close to these infrastructures. At the base of all that, it's more communication, more exchange. And I didn't mention a few associations we've done with First Nation. This is possible. They have also an interest themselves in that. And so that's dealing with the people where you go through is important. Also respecting the environment is very, very important, especially in any projects. But when I think at the big projects we have in the West, a mine, for instance, when you put a mine project, with it you have to tell the government how you will close the mine. And there is so many restrictions, but that's right. That's the right thing to do. These restrictions, we force you as a company to do it, to explore it, to do it, and to respect the environment limitations that you have. But at the same time, it will force you to already know how you will one day, after 50 years, go out and leave the place as it was before. So a lot of energy and new technologies are being put in this, and until we find that equilibrium, we have an issue. And what is sad now is that, especially in Canada, we haven't found that way now to be effective in doing that. And the discussions are being stretched a bit too much, and we kind of miss the boat, which makes the investment quite difficult to do.
Yeah, so I think there are two things going on. One, I think NIMBYism is alive and well. And in some sense, I would actually suspect it increases with wealth. Because I can focus on, oh, that's a pretty ugly power line, or, or other elements enter my decision making that at lower income levels don't. So that's a challenge, I think. On the other hand, I also think it's shifting away a little bit from just being about the backyard and into the direction that I try to present, where I think you have to make a broader case than, oh yeah, I want to build a pipeline. And how that fits into sort of people's visions of how things will change. I mean, that's definitely true in New England, where I live again, where there is a big discussion about bringing in new gas pipeline infrastructure.
Or electricity, right?
Or electricity, for that matter, right? Well, the electricity, I think the electricity is a little bit more in the, well...
You got the Quebec, right? I mean, the issue...
Well, so we can spend an extra hour and a half on sort of talking about that. On the Northern Pass line, or building lines from Quebec down into New England, I think that's really more of a real NIMBY issue, where the response, by the way, the response increasingly is we have to bury the wires, or you sort of, and there are some innovative ways of doing that in a way that's not very expensive. In the end, the Northern Passing, from what I read on the Canadian side, was in the end the Canadians were actually complaining that the project was going to be buried in the White Mountains, but it wasn't be buried north of the border. So that, I think, to me was a little more NIMBYism, but a lot of the discussion around whether or not we should build new gas pipeline infrastructure centers around, well, what I said, right? So aren't we about peaking on gas? Don't we want to get rid of gas by 2050? Does it really make sense to build this infrastructure now, or should we find alternatives to that? So I think part of the opposition is fueled by some concerns about more broader policy and energy policy issues. And I think that, if you want to build it, you got to be able to make a convincing argument that it fits into that, that there is a transition, that you're not locking yourself into a path that results in high greenhouse gas emissions. Whether the one I presented is it's not always going to be the feasible one. So I mean, it would be good from Jean, from your, I mean, so if you put a pipeline into an area where you're producing oil from oil sands and then transporting it someplace else, you have to have for me, you would have to have a decarbonization of the fuel strategy that is credible to say, look, this infrastructure is not going to lock in greenhouse gas emissions. We can decarbonize that, or we're going to, whether separate out the CO2 at some point or whatever you do. So I think developing those kinds of arguments and rationales to respond to some of the opposition that's based on policy as opposed to backyard would be important.
I would suggest that if you need the energy and as part of the mix, the balanced mix, you need to do both at the same time. Yeah, decarbonization is. There is a lot being done in that front right now, but obviously we need to do much more. Even the oil industries are looking at having lower carbon components getting into the mix. We have ethanol already, but we are looking not at the next generation of ethanol, which will be made with municipal waste, for instance. If you go toward that direction with the actual carbon molecule, you can do more miles, and therefore reduce the emissions. So there is many solutions that as a society we have to look at and work on.
Right.
I mean, it gets into the question that was raised in the first session this morning, in a way, which is some of these. If you want to think about the climate issue, trying to control construction of pipelines seems a very indirect policy proposal relative to, let's say, the carbon tax, to put it bluntly. So, I mean, to what extent is this a really effective, to really focus, for these groups to focus on opposition to something like pipelines as a way of sort of handling the climate issue? I mean, how effective is that?
Maybe I can say, my vision or carbon tax, let's say, is quite simple. I think it does at least two things. The first one is, at the end of the day, carbon tax probably means, or might means, or is meaning right now, at least in Quebec, that the price at the pump will go up. So that's one way maybe to make other ways to move people more attractive. And the second point, if you do it right, you use that money and you invest in technology, and in any type of technology to make the energy greener. And so that's why I guess we support, as a company, carbon tax. And again, it's interesting. Sometimes it's ironic because we've seen that in Quebec. People don't want that money coming from the carbon tax to go back to the hydrocarbon, to the oil and gas company, because they would think that we're subsidized, even if it's I mean, at the end of the day, greenhouse gas has no frontiers, I would say. That money should be used for the right reason, independently of the energy sector that you're into.
Yeah, okay, no, go ahead.
So to your question, the NEB produces the Energy Futures report almost every year, and we run different scenarios, a high price, low price scenario for commodities, and a technology case. And one of the assumptions that we've been making throughout the years is that infrastructure will be built as needed to link basically supply basin with markets. And more we're taking a closer look at as to whether we can continue with that kind of assumption. One thing we need to think about is that to the extent that new infrastructure is needed, at least in Canada, for hydrocarbons, the project that we see are not being proposed to meet incremental demand within Canada. Energy demand is actually very stable through time, and we see this going forward. It's mostly for exportation purposes, and to the extent that there's still a fairly large component of the Canadian economy that relies on the production of hydrocarbons, then I think it's incumbent on policymakers to think about, okay, you are putting in place policies to reduce GHG emissions, and maybe some clarity as to whether is it about reducing energy emissions or is it about limiting the production of oil and gas. And I think those two things are different, because there can be improvements in the technology, because this is what our technology case is actually showing, is that in a context where there are aggressive measures around carbon pricing and also coupled with improved technologies, the oil and gas sector can continue to grow, albeit at a slower pace than in a high price scenario, to actually be competitive on a global basis. Now, to the extent that communities or other interests are able to limit the expansion of pipelines, then that remains to be seen, given the potentially new legislative framework that we're going into in Canada.
Yeah, so your question is in some sense a good question, follow up the first session, right? So is it more efficient to use carbon taxes versus somehow preventing new pipelines to be built? And in some sense, your answer, is sort of tied to that. And if I prevent new pipelines from being built, I may not even reduce greenhouse gas emissions. And I think so. To me, the efficiency question. So I'm an economist. I sort of, but as a reluctant perhaps, because to me the efficiency question becomes increasingly less meaningful. So we're insisting on first best solutions when I generally sort of tell okay, look around. You point to me to anything that we have ever done that comes even close to being efficient. So we're talking about infrastructure. I'd be curious for somebody to do. I don't know whether the research has been done. Large infrastructure, I suppose, has never been built efficiently. It's been built when we thought it was necessary, and if it's large infrastructure, it's often actually really sort of society-level decisions. The interstate highway systems in the United States, or those kinds of things. They tend to be not sort of the outcome of very efficient processes. So to me, the efficiency is in some sense less relevant. The question about, okay, am I going to reduce emissions? And perhaps not so much can I tell whether or not I can reduce emissions, but again, this sort of the insurance versus sort of stranded cost issue. Okay, do I create optionality for doing that? Maybe a relevant question. So I mean, in the case of very local, I mean national sort of, does exporting oil or gas, in particular, let's say gas, right? I'm exporting gas as LNG to China. Is that going to lower greenhouse gas emissions? Depends entirely on whether I think it's going to displace coal or it's going to displace renewables, which could also be built in China, right?
Where China might get it from if they don't get it from Canada.
Well, or if you don't build that pipeline, they get something from someplace else, right? If you don't build the oil pipeline, they get it from some other source, which the carbon content may be higher or lower. So those are, I think those are questions that are impossible to answer, basically, 20 or 30 years out. So to me, that by itself does actually, from a greenhouse gas perspective, doesn't provide a compelling reason to do it or not do it. I think more interesting in some sense for those are then the very legitimate sort of local economic concerns. And there, I mean, I don't know what the good comparison countries are, right? Norway is a good one, very, very aggressive on reducing greenhouse gas emissions. But the pathways, we sell as much oil as we can, and we make oil consumption domestically very expensive, and we give everybody free pension and health care, and we have otherwise a decarbonized, a pretty diverse economy. Saudi Arabia, not quite the same thing. But then Holland is an interesting counterexample. So I think, to my knowledge, Holland is the first country that has actually decided as a country, we're going to stop producing natural gas.
Yeah, because they had local issues with the earthquakes.
Well, no, not just fracking natural gas. So
No, it wasn't fracking, but it was subsidence issues.
Right. So that may have aided, right? But I think in the end, so that's the harder question. So all these are countries that even if in 2050 we think we don't want to use that stuff anymore, it creates lots and lots of wealth and employment in the intervening 30 years. And go back to Mark again this morning, very hard for politicians to get reelected saying, yeah, and you're not going to be unemployed, but your kids are going to be just fine in a decarbonized world.
Well, I had some more questions, but I think I probably should give the audience a chance.
Sure.
So,
Whoops.
yep. I think there's microphones somewhere down the back if you can use those.
Take off. Hello. Yeah, I want us to take off our Western economics hat and look at the large infrastructure investments in Power Siberia, in Belt and Road, and yes, Nord Stream, and sort of propose that these are multimodal sort of situations where you may have Nord Stream and Northern Europe go for a very heavy decarbonization sort of policy. China, we're not sure. It may do a combination of carbon capture or other sort of things. And again, the Belt and Road, we're not sure if that's going to be gas to Southern Europe. So back sort of to Jürgen's point is each one of those infrastructure investments has very different sort of criteria for making them and sort of policy implications on them, and just sort of talk to that, because we're really dealing in multimodal situations, not an equilibrium, and we have to look at those infrastructure investments at different parts of the world in not necessarily the same market dynamics that we have as our Western perspective.
Any comments?
No, I think that's a very good point. I guess I'm trying to figure out where the advice comes in. I mean, so as I just sort of started, right? So these investments have a number of criteria. I would think that a lot of the infrastructure investments that China is making right now they definitely have an energy criteria where, okay, we're still a rapidly growing economy. I want to make sure I have reliable energy supply. There is an economic development component to that, exporting X, right? So there's that. And there's a greenhouse gas component to that. In some economies, decision-making is a little bit easier on saying, all right, I'm going to combine these factors, and I'm going to then do things like China does. In other countries, that's a little harder, where some of the investment drivers are not subject to policy decisions. So this, I mean, not as much subject to policy decisions. So selling oil per se is a little less public policy driven than it is in China, probably in Europe or in North America, even though there's obviously a big role. So I don't know how to sort of evaluate generally whether in a regime where you have more unified sort of visions of that, you make different infrastructure decisions than you do in these mixed market economies where greenhouse gases seem to be sort of the area where we think policy is sort of primarily responsible, and the other stuff, it's more the regulatory process is accommodating. Like we're going to permit those pipelines and transmission lines. So I don't know whether there's an answer. I mean, I just, right, these are the outcomes, the infrastructure outcomes, I think would be my answers, are going to be different depending on the political market regime that you have, and I would expect maybe China to build a lot more infrastructure because it has unified a more unified view and vision and the ability to act on it than in the Western European and North American economies.
Any other?
Maybe quickly as it relates, I mean, great example about what is being done elsewhere. If you think about the challenges of doing such a thing in Canada, I mean, you would be navigating multi-jurisdictional and multi-regulatory spheres that, looking at how challenging it's been to build a single pipeline, then one would wonder if one project proponent could actually be able to navigate a multimodal across many different jurisdictions. So if such an idea were to gain momentum, I would see this being essentially a policy decision to be developed both in partnership between the federal government and provincial governments as well. Good.
Okay, next question.
My question is first for Jürgen. There are two elephants in the room before we can do deep decarbonization. The first one is storage of an electric system or the lack thereof, because hydrocarbon provides storage at all phases, but electricity doesn't or barely does. And the other thing is the point that I raised earlier is the EROI of green energy to a large extent. So how do you address that in a deep decarbonization? You know, you're probably aware of Jacobson, who wrote a report in the US and says that if we can do a deep decarbonization and rely on sun and wind, and the remaining 10% where there is no sun, no wind, we use electricity. But let's think about it. It's like James Bay here. There are 6 power lines, 735 kV that come down. If we use it 10%, we'll need 60 power lines. And we need to multiply the number of a power station by 10 the same way. So can it be done?
What was the second point? What was the
EROI, the energy return on energy invested.
Sorry, okay, got it. The first one's easier to answer, I think. And I mean, I tried to sort of point to it. Yeah, batteries are not good at solving these problems, I suspect, even if batteries continue to improve a lot. We need, what's the carbon-free equivalent to the Strategic Petroleum Reserve? What's the carbon-free equivalent to all the natural gas storage that we have for the specific purpose of dealing with unexpected, longer-lasting situations? So when I do the modeling, that's the challenge that emerges, and I'm not the only one where that challenge emerges. So I think there are pathways that involve gases and liquid fuels where you don't think of them as fossil fuels, you think of those as the storage medium. And the question is, can I make them in ways that are carbon neutral, or you could actually argue you can make them carbon negative if you do it right. And that involves, I think there are 2 processes for doing that. The first one is carbon capture and sequestration in some sense, where you suck the carbon out of the liquid or gas system, and you have
probably need pipelines to transport the CO2.
Oh yeah, no, right. So that's one, right? Mm-hmm. The other one is you make the gas and the liquids from renewable resources in the first place. That's the power to gas, power to liquids kind of stuff.
And then you need pipelines to transport the gas and liquids.
And then one thing I just want to point out, so both Canada and the United States are blessed with a lot of square feet and pretty good resources. Germany, which is aggressive in doing that, and I just learned this recently, but it makes a lot of sense. Germany's current electricity demand is 550 terawatt hours. Its total renewable potential, wind, solar, on land, offshore, is about 850 terawatt hours. Its total energy demand is 2,500 terawatt hours. So using local electricity sources to make your decarbonized energy system work is not going to work in Germany because you're roughly, 1,600 terawatt hours short. So you need to find a way to bring carbon-free energy into Germany. And so you could try building transmission lines, say from Saharan Africa. Somebody tried that. There's a project called Desert Tech, and that failed pretty miserably. But an alternative is to use basically the transportation infrastructure that's in place, gas pipelines, oil pipelines, and repurpose those for transporting carbon neutral gases or liquid fuels. And I think so that solves the 10% problem or 20% problem, because once you have converted the stuff into gas, hydrogen probably the least easily stored for long periods of time, but methane for sure, or liquids, then you can store them, for long periods of time, and basically use that to power the electric system the way we currently use combustion turbines when you have more demand than you have supply. So I think that is a feasible solution. So the second part of that is a little trickier, right? The return on the investment is a little harder, especially today, right? So thinking about the transition to that, how do you sort of create a mechanism that gets research and development, ultimately investment in those technologies, when just using gas is just a lot cheaper than first converting electricity into natural gas and then using it as if it were gas. So I think that's probably, I don't know how heavy the role of sort of government policy in that is. I suspect there is definitely a role in the R&D side, probably on the pilot side, and then there might be some role. I mean, carbon pricing would help, but it might not get you the technological advancement in these technologies early. If you have if the carbon price increases over time, I don't know at what level the carbon price will be when, relative to how long it takes to bring those kinds of technologies to sort of technological maturity, that they're attractive enough to generate then a return. So no answer on that. I think that's a pathway. I don't know whether it's the only pathway. It could be that carbon capture and sequestration has a real revival. I personally doubt it, but I think investing in those technologies to have the option is something that's really important. I doubt they'll have a positive return until we have a pretty steep carbon price. So I would think don't use the carbon price as the only factor now. Start investing in sort of R&D and pilot design and stuff like that.
Because as economists, we would focus on just the cost of these things, not necessarily just energy return on energy invested.
Right.
There's more factors of production.
So
than
no,
energy,
I mean, right. I mean, so so this is also related to how much transmission versus distributed resources you need in some sense. So efficiency in itself, right, as an economist, doesn't mean a whole lot. I mean, if in the end the solar panel and the electrolyzer are extremely cheap, then the fact that the efficiency of using electricity to make a renewable fuel and then using it is inefficient, and it is very inefficient, doesn't matter that much. If I can use, if those costs come down so much, then I can make a million BTU for $2.50. I don't care whether it's very inefficient, right? It's just going to then compete on cost as opposed to on efficiency.
We have just a few minutes left, so maybe we'll get the next question, last question.
Okay, thank you. First of all,
we've got
thanks.
two people, I guess.
Oh.
Go ahead.
First of all, thank you for your presentations. I really have learned a lot from each of you speaking. So my question is, I believe a lot of infrastructure projects in Canada have been delayed or temporarily blocked due to improper consultation with Indigenous communities, more specifically because the consultations have really only revolved around with elected councils versus hereditary councils. So my question is, what can the oil and gas sector do better themselves to have more effective consultations with Indigenous communities to ensure these delays are less likely to happen?
Yeah, no, that's a very good question. Again, it's you're talking about the oil and gas overall. I guess my experience is more with my own company. It's a key thing that you have to do right if you want to develop resources in Canada, and certainly that's a top priority for us. And we have shown a lot of good successes. I mentioned a few of them earlier, but that success we obtain very simplistically by talking to the people on site as you're proposing, and having very sometimes tough discussions with them, but better understanding what they need and what would make projects acceptable to them. And at the end of the day, what we have seen is more and more involvement, and actually it became a partnership. because the trust has been established, and we are continuing to build that trust. The trust is first tough to establish, but then you have to maintain it. And now what we are seeing is that they are involved with us. They are investing their own money. That terminal I was mentioning has a value of 500 million. It's their money, and that money will generate about 20 to 25 million dollars for them, for their education, their development, the indigenous community of the area, and this is for the next decades to come. And they have done that because they believe also that as we will develop the resource, we will, as I said, every day in, day out, meet these regulations, which are very stringent in Canada, and also the day that we'll be done with it, we'll have a closure plant which will return the site in its natural state. So it's all about dialogue, talking to the people that are directly involved. Sometimes when the politics would tend to complicate things, this is what we have seen. The government of Canada is trying with Bill 69 to make it easier and to reestablish the investor confidence. But so far, hopefully they will be successful. We would like them to be successful, but there is more work to come on that front.
Maybe a few words. From the NIMBY's perspective, what you point out, the distinction between elected and hereditary leaders, I think is one example of the difference in culture between basically settlers and Indigenous people. And I think in order to build trust that Jean just spoke about, the way we've been going at it at the NIMBY is to really put aside our traditional frame of reference. Basically, our regulatory mandate, our way to read the NIMBY Act or anything like that, and to really go into those discussions with an open mind and with a deep desire to understand what is important for Indigenous people, without being constrained by our preconception of the world. So by no means I want to imply that this is easy. I can tell you that, economists don't get involved too much in those discussions, but for example, our engineers who actually now go out and inspect pipelines with an Indigenous monitor with them, like basically an Indigenous person going along the right of way with them, has required quite a bit of an adjustment for our inspectors. But I think it's one that pays dividend in building the trust that Jean spoke about being so important.
Last question, I guess, from Laurie.
Yep, thanks. So to address the kind of power to gas, I'm actually presenting a paper tomorrow on the economics of different, right before lunchtime, but I'm curious, it kind of solves two problems. It takes the otherwise curtailed renewable electricity and may allow us to use the natural gas pipeline system, but I'm curious as to the optics of it. Even if we had 100% renewable natural gas, do you think the public would be convinced?
It's a good question. I don't know. I think it takes a little convincing, and it's a little related to the comment I made earlier. I think the gas industry probably do well to sort of begin changing the framing of the discussion, where it's very much around, oh, natural gas is great, as opposed to maybe this infrastructure is actually great because it can enable solving a problem that is a really serious problem, the way you just described, by, the sun will shine a lot more in the spring relative to our demand, and we'll need a lot more electricity in the summer than the winter, and so we need to find a way to shift the stuff for multiple seasons. This is a pathway. Having, something gaseous that you can store easily and transport it might be the missing link for that piece. But that's not the discussion I hear. It's not how I see it framed by and large. And I think that is perhaps an opportunity to at least increase the likelihood that the general population will accept it.
Thank you.
With that, I think we're into lunchtime, so I'd like to thank the three speakers and thank you for your forthright.